What's up, guys? What's up, guys? It's April. What is it? May 2nd. Monday, May 2nd or 3rd. Something like that. Anyway, I just bought a call. I haven't been doing any buys on calls and buys on. I haven't been buying calls. If you guys been watching my channel, y'all know that what I do is I do spreads. Um, but mainly I do the wheel strategy because it's been safe for the last 2 years, a year and a half. I've been basically doing um, the wheel strategy. Wheel strategy is not without its problems. It does have issues. Sometimes, like I'm caught in the REM right now. But before I tell you about that, I'm gonna show you this. When I bought this contract, if you can see it right there, I bought a contract right here. One contract. All I did was I paid $95 for it. I saw that what it was doing was SPY was starting to move. Now, as you can see right here, if it's $95 I paid for it, and when it's 103, then you can scroll down and you can see my profit right here. It's moving right there. Okay, um, that's what my return is right there. So as you can see, buying calls can get really exciting, and it can almost feel like gambling. So you have to be careful not to get sucked into the trap when you buying calls. So what I also did, I turned around and I put a limit sale in. So I bought the call, then I put a sale at $1.25. So it's just a flip real fast, and I only spent $95 and turn around. And I could have did a bunch of calls like that, but I only left $170 in my account. So right here, now you see it's starting to climb. If you watch it, you see it's at 17, it's at 18. I'll bring this down here so we can watch, so we can get it look close. 25, there it is. It's probably about to close. 26. 27, 29. This is supposed to have closed. 30. Hold on, let me find out what's going on. Why hasn't it closed? That was my close. Did it close? Oh, there it is. It's sold. So there it was. Just that fast. So yeah, it just was taking a chance, a minute to reflect. So just to show you what happened, just really that quick. Years of knowing how the market goes. Like, I don't do this a lot, not because I don't know how to buy calls or sell calls and buy puts and sell puts, because this is what I do over 6 years now. But why I don't do it too often is because the inherent risk involved and lack of protection. A spread offers you protection but doesn't offer you as much money, but you can always protect yourself. This is what they call this was a naked call. Basically whatever I put on the table I could have lost. And the thing about it is because there's a pattern day trading rule, you can't keep opening and closing stuff in the exact same day. But what people get greedy is that, and I want to show you guys, give you an example. If you can see what I did here, if you really want to follow it, you can see where it says, great, your order to open one contract of SPY at the price of $95 per contract. I only use one contract, so it cost me $95, right? Okay, cool. So then, and then I also turned around and I put a limit sale in there. And the limit sale was right here, reflecting right here where it says, we received your order to close that contract at a minimum of $1.25 per share. So what I was trying to do at a minimum of $1.25 is close that contract out to make me, what's 95 from 25, about $30 real fast. And literally, man, before I start, I had to turn the video on really quick because literally I had just put it on before I turned the video on. So the reality is that this type of thing happens fast. What happens is people get greedy and they don't automatically put in a limit order. I put a limit order in right away. Right after the order came through, I put in limit order in right away, and that way we're not taking no chances. But the first question you want to ask yourself is, wait a minute, but where did you put the limit order in? How did you know where to put the limit order in? I want to show you guys an example, and this is golden right here, man. SPY is a good one to deal with because of the movement in the market, volatility. You got a lot of people buying. You have a lot of volume. So the best thing to focus on, to me, is anything like SPY, even QQQ, anything that's moving a lot of volume in a day. Number one, it's exciting. If you want to be an exciting trader, you're chasing after thrills. But number two is because you have a high probability of swings. Now, just as any pendulum, as good as it goes to the left, it can go to the right. And love is just as powerful as hate. It just depends on what the situation is. So you have to remember that, whatever you can get in, you got to be able to get out of, So, example, what I like to do is I go to something like SPY today, and I start looking for things. First, I apologize. Wouldn't be my video. I think I only filmed, I don't know what it is. It's something about when I start pressing record, all of a sudden, something happens. It's like this in high school. But anyway, here it is, SP Spider, right? Then I go over here and I take a look and I say, okay, now with our Robinhood, you can look into the indicators and stuff like that, create your own indicators, okay? So what I do is I hit this and I put a 50 moving average and a 20 moving average. Why only 50? Because if you do a 200 moving average, and you can see it right here, that's a 50 moving average, that's a 20 moving average. The blue represents the 50, the red represents the 20, okay? So, if you do a 200 moving average, it's not going to give you as good as an immediate answer. When you do a 50, it's kind of tight. So what I did was I saw this was coming right here. I saw that number one, the candlesticks or the chart pattern was below the 50 moving average. That's automatically is in a sell zone, right? But what happened was I saw that in a short term, that it had already crossed through the 20 and the 50, and it started to come back down, touching it. So now, where it was initially in a sell zone, now it's in a buy zone, but not yet. Why not yet? Because it's still lagging and waiting on the 20 moving average to make its move, and I saw it making its move. And as long as these candles was above the 50, and as long as I saw this one headed at the 20 moving average headed up, going up through, cutting through the 50 right there, and the candlesticks was already up there, I know we about to have a short-term buy spree. I know that. And the reason why you don't see me down here looking at 1 week and 1 month, because why does it matter? I'm in and out today. The only thing I really need to pay attention is today, okay? Don't be looking at the 1 week when you're only trying to trade for the day trade. You don't need to concern yourself with what it looks like for the week. For what? Now, if you plan on closing this trade, later on, and you don't plan on getting in and out, then that's a different story. So what you're looking for is stuff like that. I'll give you another example if I can find one. Because the key of this thing about trading is you just got to be patient and make sure. Here's QQQ, for example. And I'll tell you, here's QQQ. What do? We go over here on Robinhood app anyway, and we start looking at indicators. Now, I didn't talk about the MACD down here, because honestly, I don't really need it. RSI is going to start demonstrating oversold and overbought, but honestly, I really don't need it. I mean, literally, I can get rid of those and just look at that, but it's just a little bit something extra, kind of tells me what it's already done, not what it's going to do. Remember, indicators don't really tell you what they're doing. They are responding mechanisms to the market. You know, they can't make a move. Remember, nothing can plot itself without first have seeing what it can't plot itself without first the action already happening in the market. So all of these indicators come right after something happens. So here's another example. So let's just talk about it. Now we see this right now on QQQ. When we come to the market, to me, what do you automatically say? What do you automatically see? You automatically see that we're in a downtrend. Automatically, you know we're in a downtrend because everything is here's the 50, here's the 20, and everything on the candlesticks or the graph is below that. So there's no question about what the direction is. It's down. The problem is momentum. Problem is, what happens with new traders is they'll come right in right now. They see that this is all in a downtrend, and they automatically assume that it's going to keep on going down in the short term. That's not the right assumption, because what often happens is a pullback. And you can see here's an example. The not so smart money saw this and they started selling. And what happened? All the people who had all the smart money was buying. So it shot it on up, you know. So and then now what's going to happen? Once they start buying, all of the people who were scared, they start selling. They started trying to buy it back up. And what happened? It made it keep going up, keep going up, keep going up. So everybody was able to get out of their positions. You know, people who bought calls were able to get out of their positions because those sellers, those people who were selling down here, who were saying, "Oh, it's going to go down. Look at it, it's going down. It's going down." What happened was the buyers came in and started saying, "We're going to make them push it up and scare them." And so that's what they did. They scared them. And so then it pushed it on up, and then that's what happened. And then what happened? All these buyers got nervous, and they started to get out of their position. And the more they got out of their position, the higher it pushed that chart up even more and more and more and more, until it ran out of steam. And then finally, it started returning back to where it wanted to be. Okay. So now we could say, what is it going to do now? Well, let's go ahead and look at the RS. Let's look at the RSI. RSI is below the 50, and it's showing it, but it hasn't reached all the way to the bottom down there yet. Okay, so it hasn't overbought. Here's an overbought zone right here. Excuse me, oversold zone. It's an oversold zone. This RSI 14. So it really should be on 30. That graph right there should be between 30 and 70. And the little red line that you see, the red shaded area that you should see right in here should be 30 and 70 right here. Represent 30 and represent 70 right here. So anyway, once it gets down to 30, it should be oversold, which means it's time for it to go up. And once it gets up to 70, it should be overbought, which means it's time for it to go down. Okay? Let's give you guys a quick, for those who just don't know. Right now, it hasn't reached oversold yet, but you can see the chart going down, and you can see the RSI going down. So it's going to be looking for a break to do what? Up. Okay? It hasn't done that yet, and we haven't got to that point yet. And start buying puts right now would be naked puts right now would be a bad call. Why? Because you know that it's got to go back up, and you're not catching it at the cross. I have a rule: catch it at the cross, or don't catch it at all. If you don't see that, and maybe I can go back in time and show you. Here's a good example. Here's a good example of crosses that I'm talking about. I'm sorry. Shoot. Um, Here's a good example. That's a cross right there. You see where the 20 crossed over the 50 moving average? That's a cross. This is not. This is a bounce. The 50 just came down and bounced off the. Excuse me, the 20 came down and bounced off the 50, and then moved and kept moving back up. So that don't count. We're not even talking about that. But this is a cross right here, where it crossed right through it. And that's a buy indication right there. Especially when you see this right here, they're above. So as long as you see the candlesticks above, and then you see that 20 making it, that was buy all day. That's when you come in with your calls. And if you got candlesticks, you might look for a confirmation stick. But on the short term, just remember, you're not going to have a lot of time. You got to kind of already be ready to be in position, ready to buy. So just to give you an example, so that so even if I was to come in and buy, we're not going to do it now because this isn't the time. Because right now you can see where it's at right here. This is not a cross for me, so I don't buy at non-crosses. I don't sell or buy at non-crosses, even though right here it's indicating. It's right at the 50. See, that's the worst place on the RSI for you to buy or sell anything. It's right in the middle of the RSI. You never do that. You only deal with the RSI when it's at the top or at the bottom, and you only deal with this at a cross. So, yeah. So to give you an example. So sorry. And I mean, maybe some of y'all might be confused. I could change it to candlesticks just so you can get it, but it ain't gonna make no difference. Candlesticks just, to me, in this kind of scenario, just make it confusing because, I mean, I don't even look at the candlesticks because I don't really care that much. All I care is about momentum. You know what I'm saying? And when I see momentum and direction, I know what to do. I don't have to. Candlesticks is good if you could do candlesticks if you want to, but for me in this scenario, I only have to look at momentum and look for. Once I find a cross, I don't really need to deal with too much of anything else. I mean, once I see what it's already done, so I don't need the candlesticks. All I need is the chart to tell me. So instead of making it look too confusing with all of that, just watch the movement. It looks really simple to me. Why complicate your matters? So on the monthly time frame right here, you can see it's the monthly time frame. There's the cross right there. On the monthly, so it recently just started going up. So, once it did that cross, which is what we saw back before, which is what we saw before on the weekly. And that's where the cross happened at right here. Right there. So, yeah. So, at any rate, so far so good. But say I wanted to trade that. Say it was at a cross. Say it was at going up and I was about to trade options. So I looked at, be careful. Let's look at today because we're doing daily trading right now. This is day trading strategy type stuff right here. We're not looking at anything else. This is sort of like scalping basically. So then we look, and I'm gonna tell you a little trick that I always do whenever I'm going to buy a call. Let's just say we're buying calls. You see it right there. Buy call. Okay? Alright. So let's just say we're buying a call. My fault. Right now, you can see the share price is at 321. Okay? And then you also see that here's the calls right here. 321 calls. Right now, it's damn near at 322. For me, I like to buy in the money. And what I mean by in the money, so now it's at 322, so technically it's in the money. It's probably going to bounce a little. See, I was just about to say, it's going to bounce a little bit right there at 322, because anytime it crosses over a solid number like that, you always see a little temporary bounce, okay? So just to give you an example, so I would buy Right now, since I see it looking solid in the 322, I will buy a call at 322 right here. And then what I do is, once I buy that call, I look at it. And now I see it says a high likely fill right there at 80, at 82, 81. Me, my rule, I never take it at the fill. Me, I always go at 10.10 below or more. So like a 0.71. And if it don't get filled, I don't want it. I might even, for this one, I might even go 0.69 or 0.70. So I go 0.69. And then it says that if your position is closed during it, you'll get a day trade, and you currently have made 2 or 4 day trades allowed. So I've already made some, so I got to be careful not to do that. They don't like you doing it. So anyway, I would put it at 69 or at 70, no higher than 72. I always do $10 below, at least $10 below. So like 0.70, 0.73, something like that. And they saying it's a low likely fill. Well, that's the fill that I want. Don't be so anxious, because trust me, the pullbacks are real, bro. The pullbacks are real. It may take 5 minutes. Look at it. Now watch it. And watch what I'm telling you. The pullbacks are real. We might be a little too late for the pullback, but the pullbacks are real. And if you can get it at 370, we might be a little late. But anyway, if you put it, if you buy it, that's where I think it's trading at high likely at 80 cents. I want it at 70 cents, which is $70. And then since I know it's floating between 70 and 80 so fast, let me get it for the low 70. See, 75. I'm not going to do it because I'll be day trading, and they don't let me day trade. I don't want them to shut off my account. But, this is why some people trade futures, because there's no pattern day trading rule. But with futures, you got to have a certain amount of money. You probably want to have like $6,000 in your trade account to even begin to start messing with futures. So anyway, that's that. I mean, and literally I could do this all day. And honestly, for me, I don't really do, because if I do $20 or $30 for the day, yeah, that's good. But the thing is, I can only do that 3 times a week. So this is a small account, which I love to trade on small accounts, because that means it shows that you can make an income. And literally from this account can be a $200 month. Really on under $2,000 account. Because really I spend money out this account. Every time this account reaches about $2,000 or over, I'm paying something, buying something, paying rent, living off this account, going out for lunch, going out for dinner, I'm living off of this account, So I don't have to, I'm not really stressing at all. So anyway, that's what I wanted to show you guys, and I hope that you guys really was feeling that, and I hope they really assisted you guys. But in the event, we could have took this, and if it popped down to 73, then we know that it probably popped back up to 83. And once it does that, we'll take it. That's $10 right there, and probably less than a few minutes. So or if you want to put on several contracts. If you have the money and you want to put on 3 of those contracts, put on 3 of them at 73, that's $210 or so, $207, whatever it is. And then you mess around and it pop up to 83, you make $30. Just that quick, So right now it's hovering. It's strong in that 80 section. You don't want to give it up. So for me, like I said, this is not at a cross. That's why you got so much, stagnation. And that's why I say it's always important to get it at the cross, because that's when the movement is happening. Right now you're stuck in limbo, and you don't fuck around, and you got into this trade, and now you're stuck, and you don't know which direction this shit can go at any given time. Now see, it's falling down, and I predicted that 73 should have been the buy, and then but see right now it's probably gonna fall below 70, and then now you're gonna be in trouble, and then you're gonna be anxious to try to get out of it. You see, 75, and see and what could happen is it could be now on the direction it's changing. It could be on its way down. But anyway, that's that. Just want to show you guys that for a quick buy and call strategy, and I hope that helps, guys. Mr. Cosmic Trading Academy, 2023. This here is May. We're in it for the new year and stuff, man, and a new month. I mean, rather, and just out here representing, traveling. Check out my channel, Cosmic Trading Academy. Or you can check me out, Mr. Cosmic, and you might see some of my traveling videos where basically I live off of mostly my trading earnings, but I live in all small accounts, and I live abroad using a small account strategy. What did I tell you? What did I tell you? Oh, see? What did I tell you? What did I tell you? 73. 73. There it is. High likely feel I should be buying right now. I should buy it, but because I don't want to bat it and watch it fly right up to 83, it'll be a quick $10, and I'll be gone. I could do it. I'm crazy like that, and I shouldn't have did that because I don't even know what the momentum is on the thing. That's a bad buy. Just to let you guys know, never do that. What I just did. Oh, yeah. So now it's at 65. See, it's gonna start falling. That's why it went down. It wasn't in move. Let this be an example to you guys. It wasn't in movement, so it wasn't in that positive movement. So that's why you shouldn't do that. But anyway, let me turn around and put a sell in, because it could keep falling, and then I'll be in trouble. I lose a whole $70. So what I'm gonna do is put a sell in I bought it at 71. I bought it at 73. Hold on, let me double check what I bought it at. Average cost 68. Oh, okay. So, for me, I just get out at 78. I'm not even greedy. So trade it, sell it, get out at 78. If it reaches 78, it could be in a spiral down. Like I said, you don't buy it not at a crossover. It was already at 78 for the longest, at 81 for the longest. Now it's going in a downtrend. So I really buying at that space was no good. It was already telling you that it was ready to go down. So, but on the off chance, what I'll do is, if I don't want to lose a whole bunch of money, I'll go here and choose a stop limit order. How much money am I willing to lose for the top and the bottom? Okay. Good to cancel. It might not cancel today. So I do a stop. It'll be a stop limit order. Okay. So stop at about 68. I'm not gonna really take too much of a loss. I'm that kind of guy. At $8 is too much on this little trade. That's more than 10% is $6. So why would I even take it? So points. I'm not gonna play too many games with this. So what I do is I do point 0.60. Market makers will be looking for that kind of stuff, and then 0.78 on the sell. So now you see where I'm at. That's my minimum credit. Actually, I think I gotta switch it. But anyway, that's what I want. So unless it tell me opposite. So you're placing good to cancel stop limit order the contract when the asking price falls to 60? Yes. Sell. Order be converted to a limit order at 7 per contract. Yep. Okay, that should be right. Did I do something wrong? Oh, shoot. I think I did it wrong, y'all. I think it closed me. No, I didn't. Should be good. Okay. Should be good. Let me double check and make sure we don't have any mistakes here. Take your time. Total return of money down $3. So, yeah. So as you can see, but I'm only willing to risk $8. Okay. At 60, I want this shit to close. Let me see. It should show me that I have this expires today. Oh shit! I didn't even know. And that was a no-no right there. Cause I shouldn't even have that where it expires today. I didn't realize that. But anyway, it's always good to use an expiration date. In my opinion, it's always good to use the expiration date, not on the day. I like to do the expiration date on another day in the future, obviously. Or to buy that. Yes. What about my? It should show my. Let me see here. That's what I'm not seeing. Oh, it's not. It's not up here. Oh shoot. Okay. Something. I'm glad I caught it. Check it out, y'all. Trade. Sell. Limit order. Stop limit. Credit 65. Stop price at 60. Yeah, 0.60. Did something go wrong here? 0.78. I told you guys. 0.78. Might be able to get it to 0.81, but I ain't greedy. Hold on. Shoot. Let me see. Actually, let's just do a stop limit order. 7.8. I might get it. Always put a stop in there, though, man. Honestly, always put a stop. Because it's on, the momentum is down, so you always got to have a stop, you know. So I want y'all to get any bad habits. I could even stop it right now, to be honest with you. Because it's above 68 what I bought it for. So I could literally stop it now. Filled. Okay. So that was it. I closed it. That was $5. Oh well, 75, so $7. So, I wasn't gonna take no chance of it to keep falling. So again, like I said, you gotta be careful with the pattern day trading. I just did it just to show you guys that. So it just jumped in and out, made a quick $8. Just the trade before, I just made $30. So not bad, $38 for the day. And just let the rest of these trades run, see what I'm doing, and we're not playing no games, y'all. We in it to win it, and we'll see how everything plays out. All right, guys. I hope you guys stay safe out there. You do it. Bye.